Hey everyone, I'm Roger Herring. I am the Investor's Accountant, and welcome to My Two Cents. Last week we put up a video on Roger's Laws of Lending. We got a bunch of questions sent to us. One of them was about owner financing, what you could and what you could not do. So today you're going to get my 2 cents on owner financing. First thing, there are several different types. Some of the most commonly known are the traditional, where you sold a free and clear property and you are collecting payments over the life of the loan. The second is what we call a wraparound, where you collect payments but you are paying an underlying mortgage. The third type is a rent-to-own or a lease-to-own, which is really nothing more than different names for lease option arrangements. Now, here's the key. You can owner finance anything, okay? But that doesn't mean you can spread the gain over the life of the loan. That is only true for something that qualifies for installment sale treatment. And the installment sale treatment is only for capital assets. That means a rental property, or in some cases, your primary residence if you did an owner finance on that. So, if you are doing the installment sale, you would spread your gain over the life of the loan. However, you must take any depreciation recapture and recognize it in the year of the sale. That's the downside to it. Okay? So, here's a few laws that I have. Call it Roger's Laws of Owner Finance. Alright? First law, if you're going to owner finance a flip, then you better get enough down payment to cover your tax burden, because the entire income is recognized in the year of the sale. You do not get to spread it over the life of the loan. Preferably, what you will do is do a lease option. And if you're going to owner finance, you're going to turn that property into a rental. For how long? 1 year. Why 1 year? So you can get long-term capital gain treatment on the property. And you get to see how they're going to treat your property. Because if you hold the paper, it's still your asset. It's not their asset, it's the bank's asset, and you're the bank. Alright? You're going to collect an option fee up front. This is a privilege. And here's the beautiful thing. That option fee is not taxable until it is either expired or it is exercised. How much total down payment do you want? Somewhere between 10 to 20%. Why? You want them to have skin in the game. Because the more money they have at risk, the more likely they are to proceed and purchase the property and to make their payments on time. For that matter, time is of the essence. So, if during the lease option period they're late on rent or they miss a payment, deal's off, the option fee is yours, they can either stay in or you can evict them and start over. When you do this, be the bank. In this case, be the bank means you will collect the taxes and the insurance with escrows, and you will adjust those escrows every year. You do not trust anybody to pay the insurance and the taxes on your property, on your asset. And last, if they don't make a payment, if they miss a payment in an owner fi scenario, you foreclose. It's not personal, it's just business. Now, let me tell you one other little secret you can do in an owner finance arrangement. We as Americans, we are basically dumb sometimes, because we'll go and buy a washer and dryer and pay $29.99 for the next 100,000 years on that thing. We don't care about the interest rate. We don't care about the price. A lot of times, all we care about is how much is the note. Sorry, that's the way I see it. Now, as a savvy real estate investor, would you like to lower your tax burden? Of course you do. So what you do is you agree on a monthly payment for the property. Now, you're going to drop your interest rate and you're going to raise your sales price. Why? Because interest income is going to be taxed as ordinary income. The sales price is going to be taxed at capital gain rates. Big difference. Your buyer, same payment. They probably will not care. That's it for today, guys. Hope you enjoyed it. Until the next time, Roger out.